Take a look at the markets. They're doing fantastic. Nothing can bring them down thanks to Jay Powell and the crew. They have our best interest in mind because they care. They're working hard to give money to companies in need, and that will help out individuals because they can keep their jobs. Except, what happens when the Fed bails out companies and they just fire people anyway? You came here for the truth, so let me unveil that for you. Today we're going to look at what's really going on. They've created a market where there is zero risk, or at least that's how it's perceived. We can see this particularly with the retail traders. Any company that dips down, they buy it up. They do not know the repercussions of this. They do not understand how bankruptcies work, but this is what they're doing regardless. They don't have the experience, they don't have the foresight, and of course we see the same trades being piled into time and time again. When you look at what has happened with the central bank balance sheets, not just the Federal Reserve, but the others that I will show you today, we can see that they're expanding at a dramatic rate. This has found its way into assets. This is the reason why people are buying today, because they feel that the floor has been put on where asset prices can go. You don't have to worry because Jay Powell and the boys are going to make sure that it doesn't go any lower. This has so far been definitely true, because as soon as the market started to come down just a little bit, even though they were saying that the economy was still very good, this had resulted in where they stepped in, basically pumped up all the money. You know how it works. This just shows us a little bit of insight into what they're actually thinking. They don't care about employment. They don't care about what they say, price inflation and everything else. They're looking at asset prices. This is absolutely key. When you look at it on a deeper level, of course, we can understand that their actions do not actually represent what they say, in that, this isn't about trying to help out the businesses, because the businesses are something else altogether. The small businesses can't work with the Fed, okay? It doesn't work like this, where they can try to lend money directly to them. They are not supposed to be doing this at all. They don't help the individual. We know that as well, because every time they print money, they're actually stealing from the individual through inflation and other methods. This is, I could just go on and on about this, but I wanted to just cover what's happening right now in the mainstream media, link that in with what we're seeing with the Federal Reserve and the other balance sheets. I'll connect that, and then we'll look into the economic factors. Let's begin. All of a sudden, people are talking about a V-shaped recovery again. Quote, the stock market had it right. And this right here is absolute utter propaganda if I've ever seen it. The V-shaped recovery, which I'll show you in a second, is a fraud. You cannot ever for a second suggest that this is the case. But then they have this argument, the stock market had it right. Well, of course, we saw that the stock market essentially did do a V-shaped recovery. There's no doubt about it, especially when you look at the tech stocks. This does not actually give us some insight as to what happens within the economy. They're completely disconnected, and we know that, and yet they're still trying to put this out here as if the stock market is forward looking, so you don't have to worry about anything. But that's ridiculous, and let me tell you why. How far out are we able to look into the future and be able to accurately predict what's going to happen? Can you tell me what tomorrow is going to look like? Can you tell me what the next month is going to look like? What about 6 months or a year or 2 years or 5 years? But this is what they always do. They give these projections, they give these forecasts, and they're always wrong every single time. Doesn't matter if it's the IMF or the BIS or a certain government or the Federal Reserve or any other central bank. Each and every one of them are wrong. Sometimes they beat to the upside, sometimes it's the downside, but they're never accurate. Even when they give a whole bunch of people, they have 100 of these different economists, they put them all together. What are your projections? They're all over the map, and sometimes they're completely in the opposite direction. Now, this has shown us time and time again that their accuracy is very low, and what we have seen with the jobs report yesterday, if you haven't seen my video yesterday, the day before, you can look at it. I broke down exactly why the jobs report was fake, but they keep pushing that in front of you. Look how everything is doing. It's a V-shaped recovery. Don't worry about it. Well, I've got some more information, but let's get into the balance sheets first. Here is the Federal Reserve's balance sheet. You could see that it has exceeded $7.1 trillion. It is still making its way upward as we have expected largely. This is growing along with the other central bank balance sheets. I'll show you the euro. The euro area ECB, of course, has continued to expand their balance sheets, trying to match what the Federal Reserve is doing. They are at approximately 5.6 trillion euro right now. They're expanding and they're expanding. And even though they suggested that they wouldn't do this previously, now they're just going pedal to the metal. Here you can see the Bank of Japan has expanded at a dramatic rate. They have really been doing a number on their currency, essentially worthless at this point. They have become the only buyer of pretty much everything that they sell, and that goes for the ETFs. They own 80% of the ETFs in the country. We have seen the maximum amount that they can purchase for government bonds. They actually displace all the other buyers. That's how much they buy. It's really, really embarrassing. Big error on jobs forecast could have policy ramifications. Look at what has happened just recently with the actual job reports that they put out. And they said it was going to go one way. They said it was going to look pretty bad. And of course, we saw this print that they put out there, 2.5 million into the positive. How could it be so wrong? Well, look at this. The May unemployment report risks misleading lawmakers into a false sense of confidence about a recovery. Look, if everything's going to be a-okay, why do you need to print more money? Why do you need to do all the stimulus? You're telling me that the jobs are returning. Do we still need to be giving out the loans to businesses? Do we still need to be doing all of this excessive stimulus? Really? You're saying it's back to normal? You're saying everything is fine? Well, then you could just pull that stimulus away. But of course, this isn't the case. This is actually a really good article if you wanted to look at it. I was going to do more of a deep dive into it, but there's obviously no time. You know how the Money GPS works. But I would recommend it. Of course, link will be in the description under the sources. Northman Trader had a few things to point out here, and I wanted to highlight them. They actually made the comment on CNBC, as I showed you a moment ago. All of a sudden, people are talking about a V-shaped recovery again. The stock market had it right. And look what Northman Trader had to say. Lots of victory laps this weekend. Amazing. The parties, one can throw with a $4 trillion deficit and a $3.5 trillion in Fed intervention. Since it's all consequence free, perhaps we can just keep partying forever. And isn't that the way that it's presumed? That all of the money printing, all of the deficits that have created the V-shaped recovery in stocks, they can just go on forever and ever. We can keep pushing it higher and higher, utilizing these methods because they are of no consequence. Well, is that really the case? Well, since the Fed is already running unlimited QE financing all of the government and corporate debt, it may as well buy it all, then none of us need to pay taxes anymore. Isn't that the case? Look, we're paying taxes into the system when if you don't have a problem with all of that which has been happening over the last few months, well, why pay taxes? Why not just print money, deficit spend, if there is nothing wrong with that? That's a question. I'm not asking rhetorical. If any of those out there who deny the information that I bring up and psychopathically watch these videos every day, please let me know. Another one from CNBC, the better than expected jobs report follows a series of other recent data that points to a V-shaped recovery. Take a look at these charts. Job losses and gains since 2015. And you could see it makes it look like it's a recovery here. V-shaped recovery, fantastic. But as Northman Trader points out, now try it in context. All employees, total non-farm, and you could see that it's a huge drop off and then this ever so slight recovery using their fake numbers, by the way. And still, this is just showing you how unbelievable it is when they are bold-faced, absolutely just putting it right in your face, lying to you, and this is it. This is how they sell it to the public, and they do it over and over again. This article here out of Bloomberg is making a very interesting, discussion. And what I think is that a lot of people, a lot of the analysts and things, they don't really look at the wider picture. They don't really zoom out and be able to see how things connect. Well, I wanted to show you this. Fed vow boost debt binge as borrowers cut thousands of jobs. So the Federal Reserve right here, which is the lender of last resort, has been giving money all over the place. They've been giving it to the businesses, they've been giving it, of course, to the banks, and we have seen time and time again what this has done. When you look at it historically anyway, financial crisis, it was absolutely horrible what they did, and this time around they said, no, you're not going to do the same thing. This time they actually benefited the banks because they made billions of dollars, all because of the way that these systems were set up. Banks sit in the middle and of course print up the money, deficit spend, whatever it might be, it funnels through the banks, they make the middleman fees. This time around, things were a little bit different than last time in some instances here, but obviously we know who benefits every single time. This just goes into a little bit more detail because what we're looking at now is the fact that we give them the money, we give them, let's say like this, we give the Federal Reserve the ability to print money out of thin air, and then they actually lend money to whoever the heck they want. In doing so, we are losing out because of the inflation on our currency, and then they lay people off at the companies. This is an utter joke, but people just love it. They really don't care. Soon after the Federal Reserve's March 23rd assurance that it would make borrowing easier for American corporations, Cisco Corp sold $4 billion of debt. Not long after that, the food service giant announced plans to cut 1/3 of its workforce, more than 20,000 employees. Dividends to shareholders would continue. So they're giving the dividends there, but they're going to cut the employees. There are so many examples of that. They get into that somewhat in this article here. They break it down a little further. But this is the point I'm trying to make. It's that the money gets funneled through this system. It doesn't matter if it goes directly to the banks as a bailout or indirectly because they're making the commissions halfway through. It doesn't really matter to me. All that matters is the inflation is destroying the average person. The average individual, let's say bottom 50%, is never going to see the so-called trickle-down effect. This doesn't work, but they keep lying and people keep swallowing it, so hey, why not? Really quickly here, another Bloomberg article. Citi says wealthy clients are holding too much cash. Time to buy. Well, you might be correct, sir, but when I look at this, all that we need to know is what is really going on behind the scenes. Are you telling people to invest? Are you giving financial advice straight up right now because you know of some inside information that now is the right time to buy? Or are you looking to make more profit because holding it in the money market funds, holding it in cash is not going to make you, your traders, and your business any additional profit? That's the question. Workers working part-time for economic reasons was 7.7% in May, and this has dramatically increased in the short while, as we have seen with all of the other statistics. This is important, okay, because when you see people that are technically still working, but they're given less hours, so many people that I have talked to have received cut hours, cut salary. That's not a full-time position anymore. That's not a full income anymore. How are they supposed to pay their bills when, as we have seen numerous times, even those making 100K plus live paycheck to paycheck? Last but not least, just wanted to cover this. Canadian trade plummets amid global shutdowns. There have been so many examples like this that I have shown you over the last little while. This has been just one country that has been really hit hard by all of this, in which we have seen it doesn't matter what's going to happen to the stock market, to Amazon stock. What happens is to the average individual and how they respond to all of this. There have been so many people out there that have really taken a big hit by it, and so many in this group, in that, let's say, bottom 50%. These people here, they never even recovered from the financial crisis. Well, that's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. If you want to check me out on Instagram and Twitter, you can do so at The Money GPS. If you want to learn how to sell online, now is definitely the time. We could see the pace has picked up so dramatically. If you want to learn for free, I have a free e-course, theamazongps.com. Do you want to understand the financial system? Well, these two books explain it to you very simply. You could check them out at the link in the description if you want the audiobook, themoneygps.com. Hey now, don't go anywhere. Have you seen this video? You definitely want to check it out. Click on it. I'll see you there.